going on YouTube? So I know I've been taking a couple days off. I haven't posted and uploaded, but main reason is because I've just been kind of crammed with school a little bit, starting to get papers and trying to get stuff done early. Not creating excuses. This is something I still love. It's just been a little bit busy lately, and kind of been prioritizing school ahead of the market because I want some stability because I'm still learning this. So yeah, but with that being said, we're gonna get right back into it after a couple of days off. I'm gonna go through this scan. I'm gonna go through my watch list. I'm gonna go through some of the alerts that were triggered on my off days too, see what type of setups I might potentially attack. So yeah, let's go ahead and get started. So FT, and this one's a warrant, so I'm gonna go ahead and cross that out. I'm looking at the largest percent gainers right now. So FD had a huge rip today, so let's check that out and see what's going on. Okay, top wick $2. Had a good bounce. Would I feel comfortable attacking this after its first rip? Could it keep going? Yeah, I'd probably stay away from it because it could come down pretty hard off its highs. So, but it is showing a bounce around $2. So that's kind of bullish because shorts are risking off that top wick, and then a volume with that volume and that break over that high, it could certainly keep going. It's had a past spike too, up to $8, up to the $8, $9 region, but yeah, I'm gonna stay away from it because of the potential for loss with that being up so high already. YRIV had a nice bounce at its in the 117 118 region. You could have bought there. But now it's sort of reaching its highs. It is building some support and some buying pressure along over the course of the past week, but there's that resistance at 170, so definitely wouldn't chase here. FRSH, CFMS. FRSH looks like break over 645, a little too spendy. Probably just stay away from it. CFMS, I try to keep my prices down beneath $6. CFMS, it's just what I'm comfortable trading. CFMS, yeah, I wouldn't feel comfortable trading this because it's just in a downtrend over the past week with lower lows being set. And it's not really an incentive to trade it unless it gets back to the 120 range and gets back to the 120s, 115, 110 ish. Actually, I'd be super cautious with this one. Not even cautious, I'd probably just avoid it unless it got to that level and confirmed some sort of uptrend, basic support and resistance buy. But the likelihood that it goes to that level soon is unlikely. So SCNS 2, another case of just a downtrend, slow grind, not a slow grind, but just a gradual sell-off. Like Tim Sykes calls it the crow. which is just sort of a chart that sort of shows gradual selling pressure. This isn't actually a crow because the selling pressure can actually ramp up a little bit. It's more of an aggressive descending long-term chart, so that's not something I feel comfortable with trading. TNK, yeah, crow is like sort of continuous selling pressure. So as you can see with SENS, this doesn't really continue. I mean, it is continuous, but a crow is more of like a linear, inverse linear graph, where it's just sort of gradually going down. But in this case, there are periods where it sells off pretty significantly over the course of like a week. So yeah, stay away from that. TNK, PGNX. TNK is super choppy, so I'd stay away from that. PGNX is, wow. Wow. So if this opens around 490, the 490s, I may strike again. I may strike once. I've never striked actually on this. I can't believe I wasn't involved with the market because this was a ripe opportunity. When it opened here around 490, that was perfect opportunity to attack because it was its multi-week resistance, multi-day support. It was just a good opportunity, and I had sensed that resistance level already, or support level already, over the past couple days, past week. But yeah, I would wait for it to come down before attacking. I wouldn't chase up here. It could keep breaking out. You know, a lot of these setups, I'm like, oh yeah, I would wait, because yeah, they can keep going. Like we'll see here in a second, BMMJ, or yeah, BMMJ, which was I think it's an OTC, but it just keeps going up, and it's a momentum stock. And if you want to buy a stock like that and let it ride, then yeah, that's your choice, that's your risk. In fact, with a larger account, and if you're contributing less of your assets, it'd probably be a better play, because you could put in a smaller amount and you could get exponential gains from it, or loss, but regardless, you'd be going long and still only be losing a smaller amount. But in the case where you have a smaller account, those plays really aren't the best, because you're just sort of, while they some of them can be high odds, because the odds are that the momentum's going to keep going because of the catalyst, because of the multi-year break, because of the, you know, it's just a quality overall play. But when you start getting into a range where it extends, so I'll just go ahead and I'll get back to that point. Let me add PGNX to my multi-day support and resistance, and see if that pulls back to the 490s. And if it does at the open and it's holding well, it's most certainly going to be something I'll consider buying. But with going back to BMMJ, like BMMJ, this OTC stock has just ripped from, yeah, I mean, over the past couple months, this thing has really taken off, and with little to no pullbacks. And you know, I was thinking when it got to sort of the dollar region, yeah, you could play that dollar too, and say, okay, yeah, it's going to keep going because this is a dollar breakout, which is something you always want to surround yourself with, whole numbers. But in the higher relative volume too, the ideal play would obviously have been the break over 85 cents. But what I will say is this, that if you have a smaller account, you know, and you're buying up here in even the dollar region, while dollar breakout, okay, yeah, I could kind of see that bounce there. still probably a decent play. But if, let's just say you have a smaller account and you're buying in the dollar region, then in that case it's risky because you don't know if this thing is going to come, at what point this is going to experience a pullback. And even a pullback from $1 to 88 cents is, you know, around 20%, 10 to 20%. So BMMJ is something that I wouldn't feel comfortable attacking with my current account. But if I had a larger account, I might even, I would consider, you know, putting some money on it when it starts showing bounces and buying volume still, even after its pullbacks. You know, that high dip buying volume is a reason why I could keep going. So I would wait for some high dip buying volume to show, see how the momentum's holding up, keeps it up. Then I would, yeah, buy with a smaller percentage of my cash with a larger account. So I know I kind of repeated myself, but it's, you know, a very specific way to approach one of those OTC stocks. The main reason why I didn't trade it actually when it was breaking out was because it was around 70 cents, and I just don't really like attacking stocks less than $1 because it's also not really my niche. So yeah, but PGNX we're going to keep an eye out on. WTER is the next ticker, and I'm looking at the 180-day chart up top here. Let's check this thing out. So I see it, I spot a downtrend, potential reversal over the past week. Maybe it could be potentially reversing. Let's see here, but overall I mean, it's been in a downtrend for the past 3 to 4 months. So is this really going to be a quality play? No. The volume is relatively higher. Could be a break above 240. You could have maybe played that, but even then, it's not really a high odds play. It's not really a quality pattern. Not really something you can make a whole lot of sense out of. So WTER, YVR. So YVR had a recent history today. It went up to, had a pop up to 470, and now it's holding its previous resistance at 322, and after hours it's still holding the 320 level. But when you zoom in here over the past couple weeks, you'll see that there's not really a clearly defined support level. And you'll also see that it hasn't traded with a whole lot of range, with the exception of today. The exception of today, it did go up 30%. So, and it topped out in the 470s, 480s, and that just so happened to be a high from September. So if anything with this, I would I don't know, I probably wouldn't feel comfortable attacking it just in general. It seems like it's holding 320 decently well after hours. You might be able to attack it around the 320s, but for me it's not something I see a whole lot of consistency to with the pattern, and I do see it sort of selling off with the exception of this long upper wick. I do think that the long upper wick showed maybe it has potential to keep going, but selling volume immediately came in from this past spike of around 500k shares traded on October. So yeah, I mean, I wouldn't really want to attack this for those reasons. ZKIN. Yeah, okay, let's see. ascending uptrend, pull back to 175, which would also be the 175-ish, which would also be the previous prior resistance from over the course of the past couple weeks. So it did show a pop there, took multiple days, occurred at market open, higher relative volume around the 180s, which would give that support higher likelihood of holding. It also held 180 pretty well before its next pop. Yeah, I mean, if this pulls back to the 180 range, then I might trade it. But there is that ascending uptrend. There are quite a few shares bought, roughly 10 million from February 1st. Up in that range. So, you know, I really don't know with this one. I mean, I would probably feel more comfortable attacking this. So it's holding that top wick from March 4th. I would probably, and it's pre-market, not high, but one of its pre-market highs, plural, because the high was all the way up to 217, which could be a potential resistance, that 217, because it's also where it topped out. I mean, that is its resistance. It topped out around 217, 218-ish. So yeah, I probably would just you know, I don't know. Personally, I'd probably avoid this because it's not the best, most high quality pattern. And there's already some other stocks I'm kind of eyeing already that have better patterns. It's not to say it's terrible, but it does interest me. I'll leave it unmarked. But yeah, NK. NK could pull back to, yeah, I don't see anything. This is just way too choppy, unpredictable. I mean, yeah, NK, no, WPRT. WPRT pulled back 180s. It's in the midst of a pullback right now after hours. Not really a whole lot of steadiness to this chart. I do spot sort of a double bottom a little bit, but this is a higher low here and early March. So yeah, I would just stay away from it. TRCH. TRCH, as you can see, is really choppy, but as you can see on the 3-year, this is a potential breakout. However, it's not very liquid. At least I don't think it's very liquid. Yeah, it's not very liquid at all. And I mean, as you can see, had a couple 30K 5-minute candlesticks, 125K, 118K. Probably no more than 250, 300K shares traded on the day. So that's, you know, just not very tradable. Came across a great, well, I was watching listening to a chat with traders podcast, and how let's see, on how FTEK, PXLW, how trading, I forget his name, Nathan Mistraud, I believe, Mastraud, Investors Underground. He's from Investors Underground. He's from Tandem, I think it's Tandem Trading too, is his DVD, his popular DVD I want to get still. He's a very successful trader. You'll see him on the Profitly leaderboards. But he was talking about how, you know, if you're trading or buying and selling a stock that's pretty illiquid, that's really not considered trading, because there's not a lot of other people actually trading it. So that's technically just gambling. I found that kind of funny. I mean, he didn't say, oh, it's technically just gambling, but I mean, that's pretty much what he was getting at. Like, when you're trading stocks where you're getting poor fills and you're just hoping for it to suddenly move, or it's just not a very interesting stock, there's not really a lot of activity, then there's not really much to analyze. So you're not really trading. You're just guessing on setups that lack liquidity. So 180-day chart on NSPR. God dang, this has just been mauled. There is some higher volume though that's picked up over the past week or so. It just pulls back to the 420s, 430s. With this ascending uptrend and with this volume, I see why it's picked up some volume. So it looks like another company has a 7% stake in them now. Yeah, so NSPR, BKEP. Yeah, I mean, NSPR, maybe I would attack if it pulled back and I saw that dip buying volume come in around the lower fours. That would be the only way, only reason. BKEP, but other than that, I'm going to mark it. It's not that interesting. BKEP, HJLI. So HJLI immediately got met with some heavy resistance around 260. Hey, Hancock, that's my last name too. But 280s, 260 met with resistance over the past 2 to 3 weeks, as you can see. So I probably would just avoid it, to be honest. I look over here sometimes too, to my left, because that's where my other monitor is. But so yeah, just so you guys know, I'm not like tweaking out or something. But HJLI would not attack, because there's just, I mean, just look carefully here. HJLI, I just don't like it. I mean, there's a lot of volume traded. It was met with this triple top in the 260s. 3 million shares traded 3 weeks ago in the morning from selling volume, that is. So the likelihood that it's going to break this is pretty low. ADMP NVLN. So NVLN would not buy, because pretty illiquid. Could break that 150 high. It's shown that it can really go when it breaks around 150, but there's not really any relative volume to justify it, or like a key resistance, because there's a lot of nearby resistance levels in the 180s, and even some of these wicks have topped out in the 180s. So even if you were to buy this in the 150s, you could probably you'd sell in the 180s, and that's just not ideal play because there's not enough reward there for me. EVFM, NETS, and we're almost getting through this current scan, but then we'll go through some alerts too, see what's going on. So EVFM had a good perk today, broke 450, is holding $4. But it's just not worth it for me because look at the candlestick here, 5 million over, yeah, 5 million shares traded in December. So no. NETS, no. VHI, PLAG, so VHI, looking at the 180-day chart down below, get the 20-day chart, could pull back to 220s. Could pull back to 220s. In that case, I might buy. But other than that, I'm gonna avoid it. PLAG. $430 pullback. I'm kind of seeing something around the 4th. So here it was 420-ish. I'm kind of spotting a support here around 420. You'll see, I'm going to draw it exactly. Yeah, here it is. But you look at how many shares are traded every day, and is that really appropriate risk reward? I mean, sure, you might get a 10% pop if you're patient and you wait for a majority of the day, but overall there's not a lot of shares traded, which decreases the reliability of the pattern, so, and the predictability of the next move for it. So PLAG, no. VHI, PRED. PRED was one that really interested me. And it got the, after holding the $2 region, which just so happened to be its not exact resistance, but around that resistance, prior to its break above 240, this was sort of a resistance level around $2-ish. But anyways, it held pretty well, and that was the same region where it popped out. It had a morning, not spike, but a morning rally that broke that region and probably caught some shorts off guard, and some more longs came in, and it's built a lot of buying pressure as it's pulled back too, which is a good sign. And it's held $2 holding near its highs, which is a good sign. So there's a lot of bullish factors going on with this setup, and that's kind of why I liked it so much to begin with. And you see sort of the higher relative volume sweep in on its breakout as swing traders probably attacked it. We also have some warning buyers and some chasers. So there's a lot going on with this. But I will say that so maybe it pulls back to $2, to around $2. I might want to attack. But I will say this, that because it already topped around $3, and then since then it's just been in sort of a sell-off, it could just be dipping back below its breakout level. And because there's really not a lot of volume that's being made. I mean, there is some volume being maintained, but it's lower relative to the past, which obviously could mean that it's going to keep descending. And it just sort of broke 230s, so I wouldn't feel comfortable playing this right away, because this could act as sort of a even though it's already broke this resistance around 240s, 240 region. If it pulls back and then holds $2, then yeah, I might attack, and then I would aim for a 40-cent profit along with like a 10-cent risk and the 190s. That would be the only way I would play this, because otherwise you're just risking a top around the 250, 260s, and even playing it the way I had mentioned, with the $2 and then 10% stop, 10-cent stop, and then the 40-cent reward. That's really risky too, because it's been in a downtrend over the past 2 weeks. So I would probably at this point not really want to trade this, but we'll see what kind of dip buying volume it gets when it's around the $2 region. So yeah, PRED, EMKR, ASC. EMKR, no. ASC, no. TYFY, CHAP. CHAP, no, because it's just so choppy. So I only have 3 setups that I'm sort of, so PGNX is okay. I already have PGNX on my multi-week breakout watch list, so I completely forgot that. And so for multi-day, I'm going to go ahead and remove that. PGNX stood out to me as the most probable setup, so I'll go back through that. Waiting for the pullback to 490s. Yeah, that's pretty much it. Could even put it in a higher low here around $5, and I might want to attack. Regardless, in the $5 region, that's where I'm going to be really looking at or below, you know, our shorts coming in. How's the volume, stuff like that. So PGNX, we'll keep an eye out on. Now, multi-month / multi-year breakout. So I'm gonna go back through my current watch list, SPN. SPN's kind of just been topping out around $5. Not really a whole lot of interesting action. And there's been consistent volume and price neutralization that's been going on between this sort of 430 and price neutral. So price neutralizing, I'm sorry, I mispronounced that, but it's neutralizing. The price is neutralizing because there's a balance between bullish and bearish forces, in the 430s, 440s, and then the 510s, the bearish forces come in, the bullish in the 430s, 440s. So this could pull back to 455. In that case, I might attack if it puts in a higher low, considering the ascending uptrend over the past month. You look at from March, it's been an ascending uptrend. So that's kind of why I like it a little bit, not a lot. But if this 450 range was also its prior resistance, so if it gets to 450s, to the 450s, then I may look to attack it. I highly doubt it's going to sell off to that that much overnight. So this is probably not something I'm going to be immediately looking at, tomorrow. So I'm going to set another alert for slightly above this range, because it could put it in a higher low given its ascending uptrend. But I am going to take it off my watch list, because I don't think that it's going to achieve the range that I'm looking at tomorrow. So CPRX, I mean, CPRX took off once it got to 370. Would have been a good swing. Do I want to play this when it's at $5? Is there a longer term reason to play it at $5? That's my first question. If it breaks 580, so do I want to play this? Excuse me. Sorry, I'm yawning. I'm getting kind of tired here. It's 8:30, getting late. Got to get some sleep for the market tomorrow. But 570s, 580s could break out. If you're seeing what I'm seeing on the all-time chart down below here. So yeah, I mean, if it gets up to the 570s, 580s, it might even take off. You could even play this like in the 530s. But overall, like, let's see here. Yeah, you could easily play this, but CPRX is SMSI. So CPRX you could play when it comes down to the $5 range, and you could buy because that was one of its past highs on the long-term chart. And if you'll see here in 2015 March, it was topped out around $5. So, and it did show that bounce at that level overnight, and since it's been in a pretty steady uptrend. So you could play the uptrend, which is a little more risky. You could wait for it to come down to $5 and show some decent volume there. But regardless, I wouldn't play this. Oh, I'm sorry, I'm looking at SMSI. That's my mistake. I'm looking at SMSI and CPRX down below here. Let me hold on, sorry, that was my fault there. So SMSI, I totally messed up there. So 3-year for SMSI, max for SMSI. Yeah, there's nowhere to risk off of for SMSI. You could, looking at it's just weird because the 3-year, I have the max down here, but the 3-year actually shows highs in the 317s. But as you can see here, it's already kind of broke out a little bit. You could risk off the 320s, which are the wick highs from 3 years ago. But I wouldn't want to play it. I would rather wait. I wouldn't even want to play if it comes down to 280, because at that point momentum could be turning because of the considerable price decrease. So I don't really like SMSI, even though it is a clear break, and this would have been a good play. This would have been, if you were looking at the 3-year chart, this would have been a good play when it broke sort of that $3 range overnight. This was okay, so maybe actually if it pulls back to 310, there's some potential, because that's its higher volume resistance. So maybe you could play it around 310-ish. SMSI, EDAP, so EDAP, not really interested. ACHV, $350s. Pull back to $3 range, maybe, yeah. ACHV. OVID. So OVID, if this is in the 185 region, higher volume on Monday morning-ish. Yeah, I would probably just, oh yeah, the reason why I was looking at OVID is because this brings me to the man himself, Kyle Dennis, who's a self-made millionaire. Biotech, he got into biotech stocks after he majored in biology from UCLA, turned 15K. After first couple of years of working, he turned as a real estate analyst. He saved up 15K, he was from LA, and got into Jason Bond picks and turned that 15K into over, I think, a couple million. He won a Porsche from Jason Bond because he was his first millionaire student. Anyways, he looks at FDA catalysts, and he goes to fdacatalyst.com, which is something that I did in the past videos. Sunday, I will usually go to fdacatalyst.com. It's actually Biopharm Catalyst, and look at the FDA calendar and look at upcoming data releases, and also FDA approval dates, and look at the chart setups for some of those stocks, because they're often really playable. And OVID has a data release coming up here in May, I believe. So playing this off of its support 180 might be pretty ideal, and then you could set a stop loss for around the 160-ish region, mid 160s, with the hopes that it could push above 220, 230, 240 even. And this is all from anticipation for just building anticipation into the data release. You're not actually trading through the data release, because that would be gambling, because you don't know if the data is going to be positive. You don't know if they're going to move on to that next clinical stage with their drug. So Kyle Dennis's motto is all about, let's look at the bullish factors of this, the technicals of it. Let's check the institutional ownership. Let's see, and then let's sort of use basic support and resistance levels, bullish flags, breakouts, anything that could give this setup, higher likelihood. You want a good chart setup and a good catalyst. So OVID is definitely something that you could play in the 180s here. We saw this with ADMA, and I talked about this in a previous video. I'm kind of dragging on because I am really interested in his approach. I think that it's sort of a higher odds approach because there's it's one of the few approaches where I'm like, okay, Sykes doesn't really talk about a lot, but Tim Sykes talks about it sometimes, where you're looking at upcoming conferences and you're buying, basic support levels, because the stocks are playable leading up to those conferences, leading up to those data releases, not necessarily trading through them. So OVID is something, like I said, that has some good risk reward and is definitely playable until its data release. ACHV 350 pullback, if it can bounce, hold on. So looking at the all-time chart here, looking at this chart, 350s was the top, one of the top wicks from its higher volume traded pre-market, and in that case it had a descending wedge that day, intraday. I remember that, trading that. This was the chart. I printed off the chart from February for this one because I liked it a lot. But back to the point, you see how pre-market here reached highs of around 350 before sellers came in, and then buyers came back, emotional buyers came back in and pushed it above $4 region. Now you could see that it could pull back and show a bounce around the 340 region, which was its resistance and top wick from pre-market. So it could certainly pull back, get a bounce at 350, and there might be some decent risk reward. Looking at, let's see here. So ACHN, so yeah, ACHV, I don't know, because it could, like I said, it could pull back and get the bounce at 350, but that's just the pre-market resistance, and there is resistance around 460. There's heavier shares traded in that region, so that to me is like, okay, I don't really want to trade into all these people who bought at 360, 370, if that makes sense. So I'm going to cancel that alert, and I probably will just remove it from my watch list. But yeah, so this as you can see, you probably can't see it, maybe you can, but in the bottom left here, this is my FDA catalyst watch list, and those are every Sunday I look at potential, kind of like taking Kyle Dennis's approach, stocks that are playable because of these upcoming releases, and these are some of the ones I found to have day releases or approval dates over the next month and a half. So NBRV, if it gets to the 240s, maybe. Other than that, I'm not interested. EDAP, ECHV. EDAP, on the other hand, was one of these instances of a breakout, and it had some FDA, and it has an FDA catalyst. So this is a really good setup because there's that anticipation and it's breaking out. So this is why, like, the reason why I gravitate so heavily towards, not so heavily, but why I really am starting to embrace Kyle Dennis's strategies, because these data releases, they make these stocks so much more playable. And when you have the catalyst with the chart setup, like I said earlier, it just takes a lot of the guessing away and makes things more predictable. And that's really what you want, is you want as much predictability as possible with any setup. So EDAP is getting kind of toppy in the 530s. I wouldn't buy here. So yeah, EDAP I'm gonna remove from my watch list. Even though it was a good setup on the yearly breakout around $4. And then BTX I wasn't a huge fan of. So that's really it. Let's see. Oh, I didn't check out ARQL. So ARQL got some resistance here at $6, which is no surprise, given it's the top wick from its higher volume day, which is always where shorts risk off of. That's where they get paranoid. They're like, oh, or not a paranoid, that's when they attack, because you know, that's where they're gonna guess that it goes down, because buyers are in the $6 range. I mean, it's pretty clear. And they, you know, want it to fade. They're not going to short when it's not really showing, the upper wick's not really showing a top. The upper wick really needs to be sort of topping out, and then another build up after the double bottom, and this could be sort of a double top here, even though this is just a wick, not really like a candle. But you see the general pattern. $6, $5.90, $6 region. Looks like it's topping out. Looks like it probably could. Let's check out 5-day chart here. Okay, looks like it looked like it was topping out, but 560, 550 is holding pretty well. In fact, Monday, Tuesday, could have been patient with this setup. Because it held $5, held 515-ish after here, which if you were patient with, you could have made some good money. Would I want to risk here? No. But this, and I know this is hindsight bias, but this is actually a pretty good play here, because it's holding that $5 region ish, which I identified as resistance, and had a pretty nice perk up. and it's shown a past history of being able to go and get up pretty quick. So yeah, I mean, if this pulls back to $5 ish, then I might attack, but I doubt it's gonna pull back that much overnight. So PGNX, okay, CHK was the last one I was gonna look at. CHK is just so choppy, I don't even know why I added it in the first place. Probably because it was a breakout, but in this case, I'm just not even interested in it, to be honest. CHK, CPRX, which I already looked at earlier. I just kind of want to look at again. Yeah, CPRX, I don't really like. I don't, like I said, the main one I would want to attack is PGNX, and potentially OVID. Yeah. So OVID pulls back to the 180s. May want to buy because the volume is starting to pick up, and it's because of the upcoming data release. And I do sort of spy a reversal here over the past couple months in the trend. So yeah, it's had some days where it's traded pretty well, and even up into the 250s, 260s pre-market, if you're lucky enough to get a fill. So yeah, I mean, 170s pullback, keep my eye on that, and that's really it. I don't want to go through some other charts because I'm just pretty tired and I'm kind of creating excuses, but I do think that between PGNX and OVID and maybe a potential pre-market breakout, and then if there's some downtime tomorrow, I'll probably be looking at past scans as well. I'm going to take a picture of this one for Monday, but it doesn't look like we're looking at a lot. I mean, let's check out the S&P chart. So we did break those highs around 2,813, 2,813, and since then it's bounced and it's been pretty bullish. And but we still are threatening this sort of 2,940 high, so could pull back when it gets to that level. So SPX isn't looking too bad. The NASDAQ, so VIX is down to 13, so it hasn't been crazy volatile. NASDAQ's in sort of a steady uptrend after a massive sell-off in January. Wow, NASDAQ stocks have really been down. But yeah, I'm going to not be super aggressive, wait for plays to come to me, practice due diligence, solid risk reward, and hopefully I'll have some profitable trades tomorrow. I'm really making strides to increase my understanding of this, and also just less is more, you know, only looking at the best setups. I can't trade everything. As much as I want to trade YRIV and FTFT, a lot of those setups are pretty volatile, and some of them don't have the best risk reward, even though they do move a lot. So I'm mainly looking at what is the chart showing me. There has been some really volatile moves that I didn't buy, like OESX. ATAI, NBEV. So those are 3 right there where I was looking at them, they looked interesting, and I wasn't aggressive enough. So it's sort of that balance between, I'm kind of realizing it's that balance between, sort of moving in stealth and sniping when you see the right opportunity, being patient, but also being being quick minded and thinking quickly and attacking when you know that the time is right. So that'll be it for today. Hope you guys enjoyed this watch list. I'll be live streaming tomorrow for the first time in 2 or 3 days, so I'm really excited to get back into it. Have a great night.